Okay, let's go, guys. Here we go. Yo, good morning, everyone. Sorry about the delay. Holy crap. I'm going to throw some money into the swear jar. Alex O crypto swear jar. Holy shit. What a morning. Yeah, this thing just did not want to go. It was just giving us the biggest hard time. But yeah, we're here. We have audio, we have sound effects, and we have a show for you today, guys. We did get a big dumpski happen here. 24,000 Bitcoin sold off by a well. We're going to be taking a look at that data, what the whole, where was it sold at? You'll see. You'll see. It's there's a green bubble that where it was sold at. Hype right there, 5.4. See, it's one of the only ones up besides BNB today, right there. Yeah, that's where they sold the 24,000 Bitcoin. So we're going to be looking at that. We're going to be breaking everything down. Get your stream on. Guys, I apologize about the delay, but we're going to make this show worthwhile. It's OG Monday. I got my OG coffee mug. I got my OG shirt on, and I got the alumni in the class. OC is sitting in the green room waiting to get this going. You guys know what time it is. Class is in session. Let's go. Good morning, everyone, and welcome to the Morning Market Report. Appreciate you guys all joining me here. Again, Bitcoin dumping, and so did the stream. We got rugged. We got rugged by Ecamm today. I don't know what the deal was. It was a chaotic mess. But let's go ahead and bring up OC. OC, dude, thanks for being patient while we got this thing going. But where you go? Where you at today, man? How you doing?
Not much. Lovely morning. No rushing at all. Everything turning out fantastically. Right? Yeah.
Find your zen spot. That's it. There you go. Average Crypto Joe said he thought he was late, but no, you're just on time.
Love it. Well, I mean, I'm pretty surprised to see Bitcoin going all the way back down to this area. I was expecting, yes, coming back down.
Are you really though? Are you surprised? We've been talking about 110,000 for 2 weeks.
I've been, but I mean, it hit some highs that led me to believe that we might having a little bit more of a run up, somewhere around 118, and then coming back down. But I mean, I was expecting just one more pull up before the drop down, so that's why I got a little surprised with the movement, not the actual zone, right? I mean, I was expecting it to come back down, but since we broke dynamic corrector and we hold for those 2 candles on the 4-hour, I was expecting they're gonna give us a little more eye candy throughout the weekend, but no, I mean, they pretty much dumped it.
Yeah, and what this is why on Fridays, guys, on Fridays, every Friday, OC and I, we give you guys a warning. Hey, it's the weekend. Remember, there's low volume, right? If Wells are going to play games, that's when they play the games, and they did. They threw $24,000. Here's the odd part of it. Normally, when these Wells sell their Bitcoin, they do it on OTC, over the counter, which means that they do it behind. It's not on the market. It's how MicroStrategy, Michael Saylor, gets all of his Bitcoin. He buys it OTC, right? And that's why you don't see these crazy pumps every week when he buys. At the end of the day, that's how most wells do it. This guy didn't. He put it all on the exchange, market sold on Hyperliquid, and 24,000 Bitcoin hit the market when it was low. He's still sitting on $17 billion worth of Bitcoin in that wallet. So was this a wait for him to wash out all of these longs and liquidate these markets before the next move up? I don't know. We'll have to wait and see what he's going to do. There was still a sell going for the whole weekend. Oh, absolutely. Absolutely it was. We were I did it today on Monday. I know Buck's gonna be like, Tuesday's a better day. I went ahead and bought today. So as the thumbnail says, 24,000 Bitcoin sold by a whale, markets dump. Here's what I bought today. And I did buy this morning. I bought some Ethereum and I bought some Bitcoin based on, what is it? DCA Monday. We did our DCA push out on the Piper plan to all the community, and all of that went out this morning also. So yeah, there you go. Looking good. I did give a warning on Friday about Ethereum. Ethereum was at a 30% take profit mark. If you looked at the non 30-day standard deviation, and so we'll look at that today also, talk about that and what is Ethereum looking like now. It is, I'll give you a hint, it's a 1x DCA still, if we include the 30-day standard deviation. So it's a 1x today, but without that deviation, it was a 30% take profit, and I gave that warning in the Discord this last Friday. So OC, let's go take a look at that Bitcoin chart. I know you got it going there. You're busily typing there. I see you working. You're working multi-jobs right now. But let's go ahead and take a look at that Bitcoin chart and see what you got over there on that. And then we'll come back, knock out some news. I got some good news and I got some bad news. And the bad news actually means buy your investments when you can. So, OC, let's take a look at that chart, bro.
Let's get it. All right. So not muted in here. Perfect. Love it. All right. So this is what I was expecting. So, I mean, this is what we were talking about the whole week, right? Or the whole month, actually. So coming back down somewhere around these areas, we actually nailed this trade. We took profits over the same candle. That played out very nicely. And well, then we were breaking through this area. These two candles did give me a little bit more expectation about hitting some tops. So in fact, you can see it right here that I was expecting hitting the 118 area right there, and then coming back down for that bigger movement, right? So I mean, the 110 area was, I mean, still on the game, hitting that bottom part of the range, and that is because something that we've been talking about for a long time, right? And I got it here for you guys. So when we have a fake out, all right, out of a range, it doesn't matter if it's a sideways range, it doesn't matter if it's a upwards range, right? Or it doesn't matter if it's a downwards range or even a triangle, all right? If the price action gets a fake out and then closes back into the shape, the chances for it to hit the other side of the target or of the pattern become they go like tremendously high, right? So this is exactly what happens, right? So just the other way around, coming back up, coming back down, getting back inside that range, and the chances of hitting the bottom, they go extremely high, right? So coming back up in here, there we go, breaking through. All right, let me just get rid of it as we go, having this parabolic movement, coming back down, closing back inside of your resistance in here, or your support, right? And then, well, the chances, yes, let's get rid of that. The chances for us to hit the bottom of the range, they go extremely, extremely high, right? So look at how close we got to hitting that bottom right here. And well, then coming back up, having another fake out. And guess what? Closing back inside. So that gives us what? Once again, the higher chance to hit the bottom of the range. So it did got me by surprise a little bit on what we're talking about, like we're breaking once again the top of the range. I think that at least we're gonna be getting a little bit more buying pressure. And not only that, we have a huge order block right here. I still got at that time a 25% left on my bullish position out of this area right here to compensate or to trade throughout, or if we got all the way up in here. What happened is just once we start breaking back inside the trend line, well, then I closed that 25% left that I got in there. Let me just prolong this line as much as I can. There we go. And well, coming back all the way back to the same area that we bounced from once again. So what is it left right now for Bitcoin? Well, I believe that right now we can still go slightly bit lower. All right. And let me just get rid of that because we already have it. It's time for us to start drawing some trend lines. This is going to be the first one. And what we're going to be looking for, it is either a double bottom pattern, which we could actually already have, right? Or even some ranging breaking out throughout that trend line, this new drone trend line. And let me just make it a little bit thinner in here. There we go, and locked it. And as we're breaking through, going to our smart money entry zone, and look at that. As we hit it, we go parabolic, right? As we hit it, we go parabolic. So it's an important area. And then rejecting back down to our area of support, creating a higher low, and that is going to be our absolute signal that we should be going up. All right, this could change, guys. I mean, that's why we have higher lows. That's why we have swing failure patterns. That's why we have ranging down and then breaking through. So a wedge and so on and so forth, right? For the best part of it, we are looking for a signal of bottoming, breaking the trend line, and then going to this area for bounce, recovery, and push through. So that's what I got for Bitcoin so far.
Fantastic. Let's go talk about the news. Let's break all this stuff down. We got a couple events. I'm watching very closely to what happens on Friday. I think Friday is going to be the day that decides the cycle trend continuation or reversal, or however you want to look at it. If you look at it on a high time frame, it's a continuation to the upside. But yeah, we're going to talk about all that. I'm going to give a little bit of a breakdown on the higher time frame Bitcoin charts, where we at in the cycle. But let's go jump over to the news. Let's talk about what we're seeing over there on some metrics and some news is coming out today. All right, guys. Of course, I don't have a chart here that wants to be in the right place because, hey, we had to reset everything. So give me this 1 second to get this here lined up for you. There we go. Let's do that. Screen share. There we go. And we will set this to the primary screen. There we go. Perfect. Look at that. We got a chart. Actually, no, I don't want that. I want Safari, and I want that. There we go. We got a chart there. Good to go. Good to go. All right. No problems here. No problems here. Nothing to see behind the curtain here, in the words of the boss. Looking at the metrics on Into the Cryptoverse, guys. Risk summaries right now, we're sitting on the summarized at about 31.6%. Risk band price is at 42.5, and on chain is at 52.25. Of course, if we go in here and take a look at what the social metric is, it's probably back at 0. Why it's not reading there, and we'll see. Social metric, yeah, back at 0. So that 0% takes it completely out of that summary. That's where we are on the wristband, on the risk summary chart. Looking at the crypto market cap total, we're at $3.887 trillion right now. Trend on this is at 4.256 trillion, 4.256. Undervalued currently about 8.67. Altcoins making up the run there on all of that. Let's go down and take a look at the wristbands, guys. Wristbands on Bitcoin sitting at 53.6%. This is our DCA Piper plan. And what that means is that currently we're at a 2x DCA level, meaning that you would do 2 times your DCA this week. We also have this for all the altcoins over there: Solana, XRP, Ethereum, Doge, ADA, so on and so forth. A lot of them in the Discord, guys. But 2x DCA currently sitting right now on Bitcoin. Let's look at this Bitcoin dominance with stable coins. We're at 57.17%. Without stables, 61.31%. Continuation to the downside there on that dominance. But guys, I got to still say, as everyone keeps pointing out that Bitcoin dominance is dumping, this is true. But Bitcoin dominance is still at 57%, meaning that it's still holding pretty decent. 61.3% is where we are on that. If you take out all of the stable coins. So let's go take a look here at the altcoin season. So what does this mean for alt season? It means we're not there yet. We're currently at 59.18. We're getting close. I will say that we're getting closer. We really need this to pump up into that 75% mark, guys. This is so the alt season index is defined by the top 50 altcoins that have a 90-day ROI, return on investment, that's greater than Bitcoin, divided by the amount of altcoins used, 50 in this case, and multiplying that by 100. Whenever less than 25% of the altcoins have a 90-day ROI greater than BTC, then we say it's Bitcoin season. And because Bitcoin is outperforming most altcoins, right? And when it's the other way, when it's flipped, 75% have a greater ROI, then it is alt season. Right now, we are not there. You can actually see that we're in neither zone right now. We are in, nobody's in the lead. So looking at this from this perspective, therefore the requirement must be that the top 50 must include slightly relaxed. So look, OKB, better than Bitcoin. Pungy Penguins, better than Bitcoin, right? Ethereum, better than Bitcoin. But look at the ones that aren't better than Bitcoin. You've got SUS, it's lower. You've got BlackRock USD Institutional Liquidity Fund. It's lower. SWI is lower. Ondo, Cosmos, which is Atom, ICP. A lot of these are still sitting lower. And mind you, these are not very good projects overall. I mean, some of them are decent. Near's got some stuff going. Caspa, Community, they're there for it. The one that's furthest away, Pi Network. Told you guys don't touch that thing. Overall, though, as of right now, we are still not quite in either season. Bitcoin season's in the green, alt season in the red. We're sitting at the 60% mark, 59.18. Right below that, alt season is not quite here yet. Defined on how just on that metric, right? Looking at the Bitcoin Fear and Greed Index right now, we're sitting at 47 in the neutral zone. Not quite in greed, a little bit further away from greed, and not quite in fear, I should say. Ethereum Fear and Greed Index sitting in greed still at 56. Ethereum getting quite the mood there. Bitcoin was bought up this weekend by Michael Saylor. We were just talking about that at the beginning. Should we sell half or more of our bags when it hits 75 to 80? I'm going to pin that question here on my side, and then we'll address that. That's a great question, and we'll talk about what do you do when you hit that range there, Piper? We'll talk about that in a moment there, JR. But great question, JR. Always coming with the questions, man. Let me get them here. You're pegged. I got you, man. We'll talk about that in a moment, so I don't forget. I just went ahead and started here on my other chart. Strategy acquired 3,081 Bitcoin this week for $356.9 million approximately. $115,829 per Bitcoin. As of right now, they have acquired over 632,457 Bitcoin at the average price of 73,527 per Bitcoin. Key events going on this week, guys. Looking at the macro economy stuff. July on today, we got July new home sales data. August consumer confidence coming out on Tuesday. NVIDIA earnings reports on Wednesday. Another big factor can move it. Guys, NVIDIA is its total market value is just under the second largest stock market in the world, which is the Japanese Nikkei. It's just under that. Then NVIDIA by itself almost worth all of the entire stock market for Japan. It's getting there. We're going to get GDP data on Thursday, and the one that I'm watching big time, guys, July PCE data. We'll talk more about that in a moment. So, that is what we have there. We'll get into that in a moment because that's part of today's topic. And then let's look at the liquidations here in the past 24 hours. 167,675 traders got liquidated. Total liquidations coming in at $866 million. About 1.4 million away from being about 104 million away, I guess. 140. About 140 million away from being $1 billion, guys. So the largest single liquidation order happened on OKX. It was Bitcoin. Somebody lost almost $12.5 million on a single sell there, single trade. So look at the Bitcoin and crypto bubbles here. Bitcoin down about 2% on the day. Ethereum down about 2.5. XRP's down 1.7. Any big movers here? Not really. 4.3% down on Chainlink. It's under $25. But guys, look at Hyperliquid. This is where they sold all of that beautiful Bitcoin at on the market. And so the Hyperliquid making a lot of the fees there, up 5.1%. Makes me wonder, did they sit that into the Hyperliquid token? So top 20s, yeah, 5.7 down on Litecoin percentage-wise, and that's really about 7.1 on Uniswap. It's not in the top 20, but got to take a look at that one too. Yeah, that's what we got. But you can see on the hourly, we are making a little bounce back overall. The big sell off really on the daily happened between yesterday and Saturday. So looking here at the bull market and top indicators, how many of them are fired? Zero. Meaning, hey, this according to the top 30 indicators, we still have more room to go up. Nothing is firing off. Hey, we're at the top here. So looking at the TradFi side, guys, Dow Jones slightly down today, about 0.4%. S&P almost flat, down about 0.17, and the Nasdaq just barely up. It's about flat. It's 0.08%. Russell 2K is down. VIX is starting to rise back up. Let's look at the Europe markets overnight. A little bit of a mixed market there for Europe. And then keep in mind, London has a holiday today. So we'll see. Darren Desting said they have an auto daily buyback on Hype. 25% of the daily fees get rebought back into Hype automatically by their AMM. Well, if they got some good fees off of that, which I'm sure they did on 24,000 Bitcoin, that would be why Hype's going up. That explains a lot. DDT, thanks for dropping that alpha, man. Looking at the Asian markets here, we are in the green across all of the Asian markets. Nifty 50, that's India, Nikkei, Japan, Shanghai, everything was green on that. How are we looking on bonds? The 10-year yield is moving back up again after hitting 4.2. It's at 4.293%, up just slightly, 0.03% there on that 10-year yield. All of the oil and gas energy sector all green today. Gold taking a little bit of a pullback. It's a 0.01. It's neutral. It's flat. It's sitting above $3,400 though, and I will point that out because gold is one of those things that people have been moving into to hedge against the weakening dollar in the market system, guys. That's why we're going to talk about. If you're not invested right now, you might be setting yourself up for failure. Silver sitting at just under $39 again, getting a little pullback today after moving up close to 39 again. Copper is in the green, platinum and palladium both to the downside. Palladium down 2.3% versus platinum's 1.13%. All right, let's talk about the economic calendar this week. And actually, I'm going to go ahead at this point and we'll bring OC up because this is going to lead into some conversations. OC, bringing you up here on the screen with me. There we go. Guys, let's talk about what's going on this week. We do have the, let me refresh this. This might be, we'll have new home sales in here. So look at here. New home sales are up. A lot of new people buying new homes right now. Why? Because they can offer big discount deals. And I just saw a video yesterday. They were talking about areas here around Dallas. Salina was one of them, and 21% reduction on new home sales here. On new home sale prices, I should say, because they're able to offer like, hey, we'll give you this free upgrade and this free upgrade and this free upgrade and this free upgrade, and we'll throw in that too. And so they're really able to give a lot of free upgrades on these homes. So yeah, new home sales making a little rebound right now. Existing home sales sucking. New home sales month over month, though. You can see here it was down just slightly, 0.6%. Was expected to be much worse, though. Came in pretty decent. Fed Manufacturing Index, guys, this one shows a slowdown. This is the Dallas Fed Manufacturing for their region. It was at 0.9. They thought it would be down just slightly, came in negative 1.8, and this is a weakening economic sector, the manufacturing sector, right? What I'm watching this week, though, durable goods orders, I think this is going to be important. It was negative 9.3. Again, durable goods orders, economic pillar. They're expected to be down 0.4, 0.25, 2.5, negative 2.5. There's the word. Right now, if this comes in lower than this, then that means, hey, look, it's getting really weak there. Again, all of this is leading to a point that I'm going to make here in a minute. GDP growth is expected to be up. Okay, that's a good thing. It was negative for the previous quarter, so this is an estimate for quarter two. We'll look and see how this looks right now. It is expected to be up. Was negative 0.5. The one to watch. Initial jobless claims this week. Is this going to continue to the downside? One of the forecasts says up. One of the forecasts says lower. So. I have to see. Keep an eye on jobless claims on Thursday, and then Friday we're going to get core PCE. Guys, if the PCE, this is the primary inflation indicator that the Federal Reserve watches, and if we're talking about rate cuts in September and we're seeing weakening in the labor market, if this inflation is high, you're going to see crazy volatility in the markets on Friday. because this means, hey, how are they going to cut rates? They have to cut rates. Why? Well, how are they going to cut rates? They have to cut rates. They can't cut rates. That's the conversation. And I know it sounds chaotic, but why? The reason for that is because we're seeing a weakening of the labor market. The job numbers are sucking bad, man. And so that means, hey, we got to cut rates. We're hurting the workforce, right? We're hurting their economy, the backbone, the buyers, the retail, right? But if inflation's going up, then they really can't. And so if they do cut rates, they're cutting rates into rising inflation. Rising inflation while job numbers are going down is the definition of stagflation. So, really, really hard situation there. And so Thursday's job numbers and then Friday's core PCE is going to be a big one to watch. As of right now, it's expected to be neutral, flat. That would be a good thing. If this comes in high, if this comes in 0.4, 0.5, some crazy 0.7 number, who knows? You can never tell with these things. Then we're going to get into a world of Wall Street going, okay, I don't even know how to process this data. Let me just protect myself. And that's where we'll see that sell-off come in at. As of right now, that September rate cut that we're talking about, that chance for that is coming in right now at 86.2%. This is climbing back up. It dropped all the way down into the 70% range. Now it's climbing back up. We're starting to see a likelihood that we do get this rate cut on September 17th. We'll talk about that in a minute, and we'll go over here. Let's go talk about this first, OC. So the reason for this recent Bitcoin dump, Bitcoin dumped to 111,000, cause identified. Dormant Well wallet transferred and market sold. That's the key point there, guys. He market sold 24,000 Bitcoin, approximately $2.7 billion worth, via Hyperliquid derivatives platform on August 24th, creating immediate downward pressure that broke key support levels. When this happened, this is UTC time zone, 1909. That's 709 on UTC. First 12,000 Bitcoin transfer was detected. That was on X, and you can see that on Well Moves. If you guys watch that on X, that's what they detected there. 12,000 transferred. Approximately 35 minutes later, 36 minutes later, Bitcoin breaks support of 116,000. Liquidation cascade begins. At 809, full 24,000 Bitcoin sell got completed. The price hit 110,671. OC and I have been talking about this level for 2 weeks now. Ironically, that's where the price went straight to 2250. I am not the 24,000 Bitcoin well, just so you guys know. I didn't do that and call that number because of it. 1015 stabilization above the 112,000 price. So this cascade effect, this is why I say these big sell-offs, they cause all of this like trigger. They trigger second and third and fourth order effects, right? The well set off a chain reaction of liquidations across major derivatives platforms. More than 300 million in leveraged longs got wiped out within hours. Then weekend liquidity amplified the volatility. Again, no volume on the weekends. And then market makers pulled bids temporarily, accelerating the fall. Meaning that they had orders in and they said, I want to stop and wait and see where this lands at before we do this. And so they just closed out orders. That accelerated the fall because all of those orders started disappearing for support beneath it. Bitcoin dropped from 116 to 110 levels before stabilizing. The dormant well that had this wallet linked to long-term holdings, not an exchange. Platform used Hyperliquid, which has grown in derivatives volume, but is relatively shallow liquidity compared to things like Binance and Coinbase. So did he choose that because of that purpose? That also makes you wonder. Late weekend hours when order books are the thinnest, maximizing the impact. Guys, everything about this says that this was done on purpose to bring the markets down. Immediate market impact, short-term panic, but stabilization above 112 suggests that dip buyers quickly stepped in. I did. CT crypto Twitter sentiment on this, the consensus, well dump caused it. That's what a majority of the people think. Some speculations around whether the well acted independently or as a part of a coordinated liquidation hunt. Traders highlight risk of weekend leverage trading, and then broader view, dump seen as healthy shakeout and an otherwise bullish cycle removing over leverage longs. And I think that is what we saw there, OC, was a push to get that liquidation down. Matter of fact, we came down and did a liquidity sweep right there, little swing fill pattern just below this other low. Now I'm watching here. I pulled some fibs here. on this bad boy on the first one. So I'm going to go ahead and use it on this first wick down. Look, Piano Matty B, that which gets wicked gets candlesticked. We talked about this yesterday on Billy Goat Tales, didn't we, DDT? That which gets wicked gets candlesticked. And there we go. We came right back down to it. So what I'm watching here is this pull of a high to a low fib. Guys, if we take a look at what we have going on here, there's your dynamic reactor. There's your quantum reactor. We did print red bearish quantum reactor all the way back here, which told you that if we did not get above this, that we would continue down, and that's what we've seen. It doesn't always fire immediately, just so you guys know. This could have stayed gray all the way until here, but it fired red here. So it was picking up some other metrics, some things in the matrix that were saying that was going to continue down. But if we look at what our levels here, we're talking about 119 to 120,000 is going to be our golden pocket. Our 50%, and this is going to be a key area that I'm going to watch. If we reject down off of the 50% fib after pumping up into it, that is typically bearish and indicates another move to the downside. This area is going to be very interesting. Why? Because we're going to have the quantum reactor running right along that $117,584 range. And then on top of that, it's also going to be a liquidity sweep of this high right here. So if this thing comes up, hits there, grabs that liquidity, rejects off that quantum reactor, and then wicks down below with the candle closed below the 50, we could be looking at another move to the downside. And that would be the thing that would cause a lot of people to get shaken out, I think, if we saw more lows again. I will point out here, looking at the weekly, we did get a bounce nicely there on the 100-day simple moving average. But we have started to print a weekly red histogram. The last time we did this, guys, led to this entire pullback all the way to the 300. If we look at that level, it's about $98,000, $99,000 Bitcoin right now. And $100,000 is one of the areas that I'm watching closely. Our blue dynamic predictive range is coming in there, the 200, the 300, lots of support at that $100,000 range, to include the beautiful psychological number that it is, right? Also down there in that range of the $100,000 is going to be down here with this liquidity sweep. A lot of support right in that range there. Can you draw for me? Thanks. I need my drawing tools right in there. Nice support levels that have previously existed. Would make sense to see a retest of that also. So yeah, $100,000 I think will be the key area to watch if we do get that rejection on the 50. If we don't hold there, then hey, we just continue to buy. Why are we going to continue to buy when the market's doing this? Here's why. OC, let's talk about this. Actually, before I jump in on this, can you go over your altcoins, and then I'll let you go and we'll finish this up because we've started a little bit late and I know you got a class to go to. Let's kick it over to you. Let's look at the altcoins. We'll come back and talk about the so what on why we need to be buying these assets up, and then I'll wrap up the show while you go do your class. So, Wayne, what you got for us?
Absolutely. So let's get started with Solana. Solana did had an amazing run up. On Friday, we were looking for hunting that flip of the ribbon or even goose heading here. Right down here, remember that we had that little retracement where we have a goose head, little retracement for then a further continuation and then the big retracement. Well, then look at that. We caught that entry right around that area, very close to a stop out, but it ended up playing out very, very nicely. Other than that, in going to the reversal zones, because we've been seeing kind of like a pump and dump action on the altcoins. Let's go take a look at Link. So no trade on Link, just so you know, but we're breaking key support here. Yes, we have a order block right down here. So I'm going to be waiting to see that flip of the ribbon and trying to catch a long in between this area and dynamic reactor. So I'll be a little bit more generous in here. So let's open up maybe a position somewhere around here, and I'll be a little bit generous on my stop loss, which means first, my X leverage is going to be low. Second, my amount in here is not going to be a full amount, so it's going to be a quarter of a position in here, right? So again, testing the waters. I've been saying right now I'm not trusting in the market. My trust is not in the market at this point. I still need to see a definition where Bitcoin is going to be heading to for me to start taking actual full positions. But still, those positions have been playing out fantastically. Ton, for example, there you go, flip of the ribbon at resistance starting B right there. So we were looking at this goose hitting here, which was a little retracement, further move for then a bigger retracement. And guess what? We got a flip up the ribbon at the resistance. This was our predicted entry. I'm going to leave it like this because I still got to do the night show where I show where we opened the trades and how we took them. But just so you know, guys, this entry was a little bit lower in here as we were finishing out that pick on the goose head. Why? I just wanted to go for a confirmation. But nonetheless, look at that. We hit 1, 2, 3 targets in row. And, well, very short to hit maybe the fourth target right there. Important in here, ETH losing key support. And I was expecting it to lose it after we hit this area. But look at that. We're going at the top in here with the previous areas of resistance, bouncing from it, and well, going to dynamic reactor. I'm going to be waiting to see what's going to happen in here because most likely we're going to have something like that, which is going to be bouncing back up for then a further reversal. So be careful with ETH. And finally, let's go, for example, here with Bio and then Ethereum. Bio make a nice pull up to the upside, pump and dump back again. Look at that, breaking or almost breaking that zero line, but the money flow is resisting, so it's holding onto its nails for this area of support. Do we have anything in there? Well, I would say that yes, we have some support resistances, and we could be looking for a head and shoulders or something like that. So going farther down and then going to dynamic reactor areas of entry back at 0.159 ish. And just to finalize it, Ethereum, we were looking for that long in here. Well, remember that we took some of those of that long. That long was closed. And well, then this was, by the way, those ones in here, they were trade as we were also gaming. So just so you know, guys, we were gaming on Friday. That was Mortal Kombat 11. No Xbox needed, and that was a blast. A shout out to JR. He was playing there with me and trading there with me. We ended up the night with 2 trades in profits, 1 stopped out and 1 break even. So we did our weekend money for, like maybe coffee or a beer. But other than that, turning it back to you, Piper.
Yeah, I've been peeping some of those trades that you've been doing while you're playing, man. I saw you guys were doing Mortal Kombat. Was that fun? That's pretty cool. Yeah, if you guys don't know, here on Piper Academy, OC does a couple of shows. He does his trade live with OC, but he also has been doing a gaming and trading session where people in the Discord, they're jumping in, playing video games while they trade. So haven't checked it out, go check it out. But OC, appreciate that altcoin update there on the charts, man. I know you got to get going over to your class. So if you got anything for the people on your way out, and then I'll jump over and we'll talk about what's coming and why you should be interested in picking up some assets. What do you got for the people, man?
Absolutely. If I could give you one single advice, guys, and this has come from the heart, go check out the Piper plan because that has been an amazing giving out gains, taking out gains, jumping into trades. And well, overall for me, I have teach every and any all of the different DCA strategies, and I've been committing to this one, and it's been playing out fantastically for me, and I think it will be playing out fantastically for you. Even if you don't know anything about crypto, that is the way to go. I would tell you that much. But other than that, guys, smash that like button, and I guess I'll see you tomorrow.
All right, see, appreciate you, bro. All right, guys. Let's jump over and talk about what Jerome Powell did, what's coming, and what all of this means over here on my chart. Let's go to there. There we go. So Jerome Powell, this is from the Kabisi letter. The Fed Chair Powell has caved. In 1 month, the Fed will cut rates and blame the weaker labor market. Meanwhile, we have the PPI inflation growth at a 3-year high and CPI inflation above 2% for 53 straight months. Don't own assets, you'll be left behind. And here's why. Let's go down and take a look at this. To better understand what's happening, you must first understand the Fed's mandate. The Fed's purpose is to reduce unemployment and avoid inflation or Since 2021, the Fed's been laser focused on the inflation side of the mandate, haven't really paid attention to those job numbers like we have. However, Fed Chair Powell made a massive pivot on Friday, said the shifting balance of risk may warrant adjusting our policy stance. In other words, the Fed now views unemployment as a bigger risk than inflation. This is near confirmation that rate cuts are coming. And we just saw that's like 86% right now. Chance of that on September 17th. This shift hasn't happened because inflation is at the Fed's 2% target. Or this isn't happening because it's at their 2% target. In fact, core CPE is above 3%, and the PPI inflation that they just saw month over month was up 0.09%, or 0.9%. Guys, I'm going to break that number down for you, because if you take a month over month increase of 0.9, you're talking about almost a 12% increase year over year. That's how that equates. If this happened 12 months in a row, you would almost see a 12% increase to the CPI. That is a huge red flag when they see this on the monthly. Hopefully it does not continue like that. So why has the risk shifted? If they're seeing that, why has it? There we go. Because the labor market is clearly rapidly deteriorating right now, guys. You can see that this was the biggest PPI jump since February 2022, and we just had some of the worst numbers that we've seen in jobs since year to date, I guess. Latest data, 258,000 jobs were lost, revised out of the May and June data alone. That's more than the entire population of Scottsdale, Arizona. It's a lot of people. Year to date, approximately 461,000 jobs have been revised down. As we have been saying, many leading indicators are that the labor market is cracking. What does this all mean? The Fed is set to cut rates into inflation, which the stock market will love. Okay, got that? The stock market will love that. However, as inflation rebounds, those who do not own assets will see a similar situation to the post-pandemic era. Wage growth will lag inflation, and the wealth gap will grow. So the poor will get poorer, the rich will get richer, and the people in the middle will get wider and wider, okay? In fact, when the Fed cut rates within 2% of all-time highs, the S&P loves it. In 20 of the last 20 times that this has happened, the S&P has risen at an average of 13.9% over the following 12 months. Asset owners will party like it's 2021. The relief in home prices won't come. So people waiting to buy houses, I told you guys, rate cuts don't mean anything. It's all about that 10-year yield, right? The Fed has made it clear that they will remain attentive to inflation risk. So rate cuts are coming, but not at an aggressive pace like 300 basis points that Trump wants. Mortgage rates will drop, but it won't be enough. Mortgage rates would need to drop enough to incentivize 55% plus of the homeowners that have rates below 4%. But rates won't drop enough for that to happen. The results will be approximately 5% mortgage rate. With higher demand, but still limited. So it goes beyond just stocks and real estate, guys. Take a look at Bitcoin and gold, which are up 450% for Bitcoin, 105% for gold in under 3 years. The market knows elevated inflation is here to stay. Gold has been a leading indicator for months. Those who own assets are beating that inflation. Matter of fact, let's go back here and take a look at another post that I had in here that I want to show you guys. Let's go back again. Post. There we go. And let's take a look at this, because this is the US dollar. If you guys don't know, the longest bear market in history, the US dollar's purchasing power. Over the last 100 years, the US dollar has lost about 95% of its purchasing power. But guys, 40% of that 95% has happened in the past 25 years. It's a parabola. It's starting to increase even quicker on that devaluation of the dollar. Own assets or be left behind. So what are we doing? We're dollar cost averaging into our Bitcoin and into our altcoins. Just Ethereum for me right now. That's on you guys. I want to do the others, but let me pull this up here and I'll show you what I'm talking about. This is in our Discord, and it is part of the Piper plan. Look, JR, dropping trade setups. There you go. Guys, we got trade setups in there also. JR, LBC, dropping stuff in there. And then OC also. Buck plays. He hasn't been too busy yet lately. He's been too busy to drop trades. That's what it is. But OC definitely dropping some trades in there for us too, along with JR on the daily. So Bitcoin DCA strategy. This is what I'm talking about here, guys. Again, we did our Bitcoin drop this morning. On Friday, though, I did put out to the community, and I said, here's what we got going on. According to the ETH wristbands, without the 30-day moving average deviation, we are at 30% take profits. And so on, this was on the 22nd. So that would be on Friday. I told the community, you might want to take 30% profit right here, but without that deviation, we're still just under it. It's on you if you guys want to or not, because it's not financial advice. But we do have Ethereum, XRP, Solana, Doge, ADA, Link, XLM, Sui, HBAR, Litecoin, and Render. We might start looking at some other ones, guys, to add to this list as time goes on, because when we look in here, we do have access to all kinds of these Bitcoin or these wristbands, guys. We've got Atom in here, Pole, XMR, Ton. I might add Ton in here, and I might add Tron. I think I want to add Tron to this list so that you guys can get all this stuff. But that's what we're doing. We're doing the DCA Piper plan. I did do a nice purchase this morning on some ETH and some Bitcoin. And so at the end of the day, I'm going to take the warning of stagflation and what that means on the widening. Jesse, if you're missing channels, hit up Crypto Trades, man. He'll figure it out. And if you don't have it, if you haven't looked there yet, go over here to the top and you'll see browse channels. And then you can go in and turn on the channels. You may just have them hidden yourself. So go check that out. Do I have Pepe on that list? Let's go see. If I have Pepe on that list, I can add that one for you too. No, Pepe is not in here. We have Shiba Inu, and we have Doge on the meme coin side. BNB, I might add that one also. There's no Pepe in here. He does not track that. So, yeah, guys, that's what we're going to do. We're going to keep watching those, and we're just going to hit it. So go to the additional roles, hit the emojis, and just smash them to follow all of our sections. There you go, JR. So yeah, guys, if you guys haven't done so this week, watch for these pullbacks. We did get that bounce again, looking like we're going to do a little bit of upside movement here. But if we do reject on that $117,584 level, watch for a lower downside move. But after all of it, we're going to continue to DCA weekly here. Go and answer this question that JR had. The question that he asked was, should we sell half or more of our bags when the alt season index hits 75 to 80? And so I want to talk about that question here because let me pull that back up here. Baby, come back. Show all windows. There we go. I want that one. There we go. Let's go in here and talk about that, and I'll pull up the chart here. He's asking about, should they sell when we hit this, right? The 75 to 80. What I want to point out is that this thing pegs above 100 when it hits major cycles. Now, if we hit this, like if we hit ranges here in like the 85, that's typically where we do get the pullbacks, but these can last quite a while, man. These can last for a month, 3 weeks to a month. So as soon as it hits that area of 75 to 80, I don't know that I would run out of the market at that point, maybe take some profit, but I wouldn't totally pull out. You want to keep some exposure if you're going to continue to get the parabolic run up of the alts. But I will tell you now, I don't think it's going to be all altcoins. It's not going to be across the board. There's not enough liquidity to move everything rapidly. It's going to be sectors. Just take a look at the top 50s. Maybe the top 20s and just go with that. But I would let it run. And as it hits these barriers, I'll keep you guys where we're at on this number on a daily show, right? We hit 80, we hit 85, we hit 90. Maybe do portional cutouts of profit, 25, 25, 20, 25%, 25%, 25%. That's how I would approach that, me personally. I don't know that I'm going to, I don't ape in, I don't ape out. Even the Piper plan has a DCA setup of an exit plan of 30%, then 50%, making it 80, 20% on a Hail Mary. So that's how I would do that. And I'll make sure to keep you guys apprised of what those numbers are. I'll keep you guys apprised to what those numbers should be over there on the what those numbers should be where you're at, like 80, 85, what they are. I'll make sure you guys know here on the show. So Jesse said he's looking into it. Awesome. Jesse, do you have the emoji support or do you have the alumni membership here on the channel? Because if you only have the emoji support, it doesn't give you access to all of that stuff. That is only if you have the alumni, the $4.99 one, just so you know, bro. That might be it. If I remember right. So, all right, guys, that's all we got time for today. We're a little bit over here. Right now, Crypto Coin Mindset and TI Joe, Trade Intuition, they are live. We're going to head over to their channel, but I appreciate you guys being here. Just keep everything in mind. Tomorrow, we're going to talk a little bit of, actually today, for the members. If you're not a member, if you're a member here on YouTube and you're not in the Discord, you're missing out on a Monday class that we do with the alumni here. And today I'm going to talk about the LEI versus the CEI indicator. You guys need to know what that's telling us. So we will we'll get into that later on today, guys. But I appreciate everybody. If you haven't done so, smash the like. Make sure you share this out and go check out your Piper plan if you guys haven't done so yet. If you're a member, go check out the Piper plan. See what those DCA levels are sitting at. DCA levels are sitting at for this week. I'll catch you guys tomorrow morning. I'll catch the alumni this afternoon in the Piper Academy class. Until next time, guys, trade safe. Use some risk management. As always, peace, love, profits. We're heading over to Crypto Coin Mindset. See you guys over there. Bye.